We're going to begin in just a few minutes. If anybody wants to speak on House Bill 157 or 20, then there's a sign-up sheet up front. If there's anybody other than the authors who would wish to speak on the bill. Good. Okay. Everybody's got so many committees, you know, they're going from one to the other.
One for Senate Bill 20 and one for 157.
One, you missed it at 1 o'clock. I think we've got 8, which is a little more than. Do we have somebody back there, Don, to shut that door when we're done? Because I'm about to call it to order. Things get loud. Hey, Beth. I'm going to go ahead and call the meeting to order. We've got a good quorum. Thank you for being here. Without warning, I'm going to ask Representative Donahue if he would, let's see, I've got floor microphones. Oh, I got them. That's right. What am I doing? If you'd open up our meeting with a brief prayer.
Thank you. Heavenly Father, we thank you for this day, and Lord, we thank you for your many blessings. We pray that you be with our families, watch over, protect them as we're away. Give us safety here, Lord, and we pray and lift up Mickey Stevens to you for healing, that you'll touch him. Open our minds, help us to be receptive of what we hear, and to make decisions that are best for Georgia and the constituents who elect us. In Jesus' name, amen.
Thank you, sir. I believe at this time, even with my eyesight, I can see Senator Rhett is back there. And so if you're ready, Senator, yes, we have 2 bills today, Senate Bill 20 and Senate Bill 157. Senator Rhett, you can proceed when you're ready.
Thank you, Mr. Chairman, fellow representative, colleagues, friends, and you all. Today I come to talk to you about Senate Bill 20. This bill would allow local governments to petition the DCA to designate a banking improvement zone where residents have insufficient access to banks. The local government would then deposit its funds in the bank in the zone. This bill is a tool, a resource to address areas with inadequate banking services. Banks are not compelled to comply. It's an agreement between the local governments and banks. Better access to banks will mean better access to mainstream financial products such as home mortgages, small business loans, and lower cost consumer credit. Currently, the residents in these areas use check cashers and other non-bank facilities for their financial services. They pay high fees to cash their checks, receive no financial services, and don't develop any good credit rating, and money is not invested back into the community. The money immediately exits the community. The incentive, the principal effort of this bill, along with the Georgia gratuity law, allows local governments and the state to seed new bank branches in underserved areas, banking development districts, with deposits from the city treasury. After a banking improvement zone is approved, the local government may designate by resolution or ordinance for a bank to be located within the zone as a depository for the local government funds. This resolution or ordinance will also designate a fixed interest rate that is below the posted 2-year certificate of deposit. Okay. The bank pays a lower money market rate to the municipality for holding its deposits. The interest rate is negotiated between the bank and the local government. The lower money market rates on the city deposit cover the cost of opening a branch in the community and keeps it solvent. These deposits are intended to lower the financial risk that the branch may occur when opening in underserved communities, usually comprised of low and moderate income households. The banking improvement zones, in conjunction with the tax allocation district or community improvement district, can become a revitalization catalyst for communities. The banks are in a position to provide monetary assistance in the community. Since it benefits the community, this arrangement does not violate any state gratuity laws. Other states have tried this, such as Louisiana, New Jersey, and also New York and Texas. Step one, in conclusion, pretty much step one is to get the banks in these communities. Step two is to get people using the banks. Step three, once we've stabilized some of these individuals and families, is to develop people with good credit rating, along with business owners and entrepreneurs in the community. Basically, it's an arrangement between the bank and municipality in order to get banking into areas where there aren't any bank facilities, not only just in urban areas, but also in rural areas where people have to drive for many miles just to get banking services. There's nothing that forces people into this agreement. Is an arrangement between the municipality and the banks. And if you have any questions, this bill went through the Senate committee unanimously, went through the Senate chamber unanimously, 55-0, and now I'm asking for your favorable consideration. And Mr. Chairman, with that, I'll take any questions. I also wanted to add that I've talked with Bo Fears, the Deputy Commissioner of Legal Affairs for the Department of Banking and Finance in the state of Georgia, and he didn't find any objections to it at all. Would you like to stand, Bo? And if you have any questions, I have some other people to testify. I'm ready. Yes, sir.
Okay, Senator Rhett. I think any Senate bill that was unanimous is going to generate a lot of questions probably from this committee. I'm going to leave that off next time. Hey, let's start with, let's see. Oh, Representative Reed. Okay, I just had him blocked down there.
Good afternoon.
Yes, sir.
I got several questions here on this proposal. I don't necessarily have a problem with it, but so let's start with the first part. If a municipality has an account in a bank, any kind of government does, then that bank has to bond that money with their capital. So if they've got $60 million in there, then the bank has to set $60 million beside that of their capital that they can use to loan out in order to bond that government's money that's in the deposits. So it actually costs the bank money in order to do that, but what they hope to do is get the accounts from that municipality, like if you got a water department or something like that, then you hope those employees come in and bank there. So I think that's one problem you're going to have with your idea right here is I don't think that you can pay them like a CD rate for their accounts being in there. I'd probably have to revert back over to my counterpart back there in the banks and banking, but is that right, Bo?
I'm having a little problem following your question on that. Tell me your question again, repeat that again.
All right, so if you got a municipality, you got a government that's got deposits in that bank, then the bank has to bond that. They have to put capital beside that to bond that. Is that not correct? Is it still that way? Yes.
Well, yeah.
So he was talking about in this right here that they could use that money in order to fund the bank. So if you're tying up extra money from the bank, so how does that work?
Basically, with this bill, you know, banks will deposit their certificates of deposits into a bank, and then that bank will pay them a certain interest rate for them depositing their money in there. Well, what they do is make an agreement to charge them a lower interest rate that's negotiated between the bank and a local municipality, and that difference is used to pay for a banking facility, to support a banking facility in that area.
Okay, I don't think you knew it, but okay.
Are there any other questions for Senator Rhett from the committee? I think I got Representative Morris.
Thank you, Mr. Chairman. Senator, this bill looks familiar. Did we?
Yes, it came through last
Did we have this
year.
bill last year?
And it made it all the way to rules, but I had both my knees replaced, and I had my second knee surgery, and I was down, and I just...
Okay. So did it make it to Senate rules or House rules?
It made it to House rules.
Okay. All right. Very good.
This body here passed it, and it went to the rules, but then I was out because even though I can dance and play tennis and everything now, but...
Well, good to see you on your feet again. Thank you.
Mm-hmm.
I think Representative Perkle has a question. Do you?
Yes, sir, if I may.
Put my glasses on.
Thank you.
Go ahead.
Thank you, Mr. Chairman. So as I understand it, this bill, the primary purpose in this bill is to encourage banks to put branches in underserved areas. Would that be a fair assessment?
Yes, and if you combine that... I'm sorry, go ahead.
Well, you could elaborate if you will. I've got a follow-up.
It can be a point of economic revitalization, a catalyst, when you mix it with a tax allocation district or community improvement district and encourage redevelopment of an area, because in a lot of areas, people go to check cashing, they pay a fee, get their checks cashed, but the money doesn't stay in the community, goes out of the community. Plus, it doesn't give people an opportunity to build up banking services that they need, build up good banking credit. Just like before I came to the Senate, I worked down the street at a women's homeless shelter, And one of the things I did, among many, is I taught them a class on personal finance and how to manage a checkbook. And if they passed that class, I had an agreement with, I think it was Capital Bank, where they would allow them to open up an account with the bank. So when we did find them employment, the money would be directly deposited into the bank, and that would help them to build up a good credit record and a good relationship with the bank that eventually led to loans and home ownership.
Okay, a follow-up, Mr. Chairman. So I understand in encouraging investment in underserved areas. One of the concerns that I have is I used to be a banker, and I really wanted the deposit accounts from my municipal governments, but I can't imagine taking less than a market rate from a municipality, and it just looks like that. Is there concerns that we're not using the market to look at, because actually the government, the municipality's money is actually our money as taxpayers, that we're taking a below market rate of return for the citizens to benefit
the community and the citizens who are in need. Texas, if you've seen in the handout I gave you, I don't know if you've seen it, they've done it there, and it's been very successful. Louisiana, New York, and New Jersey, and it's been the catalyst, economic catalyst, to spur growth, prosperity, good credit rating, because when you have a lot of people who, so it's well documented where it works.
You had me till you threw New York in there.
It's a foreign country.
Chairman Knight, do you have a question?
Yes. Thank you, Mr. Chairman. Senator, maybe a follow-up to Chairman Perkle's question, and it more goes along the lines of, again, what's the delta between what is the market rate that, in other words, would that local government had received versus a negotiated rate? What is that amount? Do you know, or percentage? What's the delta? What's the difference?
That's, from my understanding, that's negotiated between the municipality and the bank, and no one's forced to do anything. It's just an agreement, and they make that calculation, work it out between themselves.
But is it, and I guess it's, in what you've told me, it's being tied back to the cost of a branch that otherwise would not be in one of these zones.
I don't think I quite understand your question. I'm sorry.
In other words, the bank is paying out less of an interest rate.
Than the money market rate.
Yeah.
Slightly lower, enough to justify the cost of setting up a branch.
And maybe that goes directly to the question, is what, that's a pretty expensive proposition to set up a new branch, somewhere. And I didn't know if there was data out there to show what the average amount was that was the negotiated amount. And that, Mr. Chairman, one follow-up question is, it seems in today's world, more and more of the banks are not really putting more branches out there or building more physical facilities. It seems to me they're turning to more of an internet banking. Are you fighting an uphill battle here, so to speak?
Not really. Just like I said in the handout I gave you, you could see, for examples, in Louisiana, Texas, New Jersey, I won't say the other place. They've done that, and if you look at the handout, and been extremely successful at doing that and helping people build up credit, spur economic development. It's been well proven to work very well.
Well,
and none of the,
One follow-up question, Mr. Chairman.
Go
And
ahead.
again, I'm just going back to history, and I've been out of the banking world for a while, but it also, in the downturn, it seemed that many were accusing Georgia of having too many branches or too many banks.
Last I checked, Georgia, and somebody's going to testify to that, what you just asked, Georgia does not do very well when it comes to providing banking services. Their rating is not that good. And you know, when you get out of the metro area, you may see banks, but there's some areas you just go off of Bankhead Highway, you go to South Cobb Drive, you have to drive for miles to get to a bank. And when you get out the metro area and go to rural Georgia, you may have to drive 10, 15, 20 miles to get to a bank. Not everybody does banking online. Example of that, on Friday in some of these communities that are underserved, you can, or on payday, you can see at the check cashing place long lines of people paying fees just to get their cash check, where instead of having a good banking relationship where they can have it directly deposited and then manage their affairs at the bank.
Certainly agree in some ways with that. I think what you're heart of, though, is getting at the education of those citizens of the importance of banking services versus cash checking or some of these fly-by-night tax preparation, you know.
Title loans.
Yeah. But thank you.
With a good banking relationship, instead of going to a title loan place where they put their car title up, they have a good relationship with the bank because they have, it makes a big difference. Plus, it creates an opportunity for the money to turn over in the community a number of times before it leaves.
Representative Mitchell, do you have a question?
Thank you, Mr. Chairman. To the author, isn't it true that 36% of Georgians are underbanked, tied for second to last in the nation for the least bank?
That is correct.
Okay, capturing the unbanked, and is it further true that capturing the unbanked communities would be a windfall for Georgia's banks?
The representative knows of which he speaks. He's correct.
Furthermore, capturing the unbanked would provide certainly not only a windfall for our banks, provide for other opportunities for our banks to do well, and provide much needed cash flow into our communities. And certainly, as I understand it, we are tied, to reference to a prior question, we are tied for last with Louisiana behind Mississippi in the unbanked. Is that correct?
Yes, that is correct, Representative.
Thank you, Mr. Chairman.
Any other questions from the committee for Senator Redd? I don't believe there are any. Thank you, Senator.
Thank you, Mr. Chairman. I appreciate your consideration, and thank you very much.
Thank you.
Mr. Chairman, was this for a hearing only, or are you prepared to hear a motion?
We have witnesses, more witnesses for the bill right now,
see.
so I wouldn't entertain that at this time.
Thank you, Mr. Chairman.
Thank you. Mr. Michael Murphy from Cobb County. Again, sir, if you'd tell us who you are and who you represent.
Yes, good afternoon, Mr. Chairman and members of the committee. My name is Michael Murphy. I'm a special assistant to Chairman of Cobb County for Special Projects. And I'm here today to add the support of the chairman and the county in support of this bill. I had the opportunity of speaking in favor of it last session, and I'm happy to do so again. I feel that it is interesting. I know many people may say that, may be surprised, but there does exist a bank desert in Cobb County. And just to give an example, situations when a person has to go to a check cashing facility to get their check cash that they earn their wages, to earn that money, what I found, it really becomes a magnet. In my previous position as an employer, it's a sad story when an employee comes back or experiences a robbery while they're trying to get their check cash. One example that sticks in my mind is when the camera actually showed the situation occurring, but through red tape and delay, they had a very difficult time getting a copy of that tape to be able to prosecute the person who did that act. And as was previously mentioned, I guess I looked at it from the other side. Georgia is number 3 among the top 5 of number of citizens that are either unbanked or underbanked. And I think that when you couple that with the existence of the payday lenders, a person, a working class family or working class individual that's trying to make ends meet, when they look at what the danger of cashing a check, not having an account, and knowing that someone is watching them at any time that they're trying to handle their transactions, I think this will go a long way. Last but not least, my point that I'd like to emphasize is that I think it would be a tremendous catalyst towards building financial independence, because along with that, I can see where banks could offer financial literacy and aid ultimately, hopefully, into home ownership and really moving up on the ladder and taking advantage of the opportunity that exists, particularly with the robust economy that we're experiencing. And I appreciate the opportunity to share that with you, and I certainly hope that the committee will view favorably on this bill.
Any questions for Mr. Murphy? Thanks. Do you have a question? Yeah. See if I got that. Okay.
Yeah, Mr. Murphy, and appreciate it, your comments. And again, it's one Representative Allen and I were just discussing with a question, but is the lack of banking or lack of banking services or underserved banking, is it due because there's not a physical presence, or is this going back to an issue of even if there was a branch or a location, would that in itself be enough to necessitate that? In other words, there are a lot of factors that are out there that one would make a decision as to, do I want a bank account?
Sure.
So that would be the first part of my question.
Sure. That's a very good question. And I would think there's a direct link between an area we would call a bank desert. You wouldn't have to look far to see that's probably a food desert. And in a particular area that I'm familiar with, it's also a healthcare desert. No emergency treatment facility, et cetera. And a bank becomes a central part of building a community. As we often say, without a bank, you really don't have a community. And so that's why an institution, and again, we're not at least I'm not envisioning any elaborate branch, perhaps that one would think of in previous times. I do know that there are different things that are evolving today that does not require a large footprint. And oftentimes there may be mixed-use facilities that are going in where a bank could have a facility providing most of the service, even checkless banking. But at least it's a footprint there that enables that person for not, everyone doesn't have a car, everyone doesn't have the convenience of internet, and therefore would be able to be an active part and begin to build up that financial independence.
One last question, Mr. Chairman, if I may. And I guess as a former employer, you said, are there any initiatives, or would that be a better way to help educate through the employers the need of a bank account, for instance. A lot of times, there's an option of payroll deposits versus, checks. So are there efforts that are being made through the employers to say, hey, we're going to do a direct deposit, you need to go get a bank account? Are any of those efforts? Because again, I think this may be more of an issue with people not wanting to do that, not wanting to be banked, and that's what I'm trying to get my arms around versus a branch being the solution.
Yeah, well, it's another good question. My experience has been that is evolving. I feel that I think Cobb County prides itself in being able to offer that. And if one looks into, for example, the easiest way to get rid of payday lenders is if every employer made it available where an employee could set aside funds for that emergency, they would not need that service and therefore have some advantages. But yes, I see that is evolving where employers are making these sort of programs available for their employees. There still remains, as I talk with different people in human resources, there's some employees that still just hooked on that paper check. But I think that's diminishing. It's really becoming a dinosaur. But I think this bill will go a long way in, again, building that relationship where that banker and that institution would be able to have a relationship with the community and see an overall uplift as they have a stakeholder, they become a stakeholder in that area.
Representative Mitchell. Did I not get you? Did I turn you off?
Yes, thank you, Mr. Chair. To the presenter or the author for that matter, this isn't a subject where you're recreating the wheel. Can you tell the committee where this what has been the result of other states doing a similar action?
Sure. What's been found, and I think Texas is a good example, I guess, gives credence to what they say that they do things big in Texas, but they have found that there has been a financial uplift. Again, whether you look at the family or whether you look at individuals, I think of particular interest to me is what happens with the individual, because Georgia statistically has one of the largest single person or single family entity in the entire country. And so that opportunity to, and again, if I use the target of just $2,000, that would represent such a major step being able for an individual to be able to accumulate. And if you just look at what some of the fees that many people are paying just to get that check cash, I think the lowest I've found is 1%. And I think that, along with, you see what happens when it comes to income tax time. There's no reason why you should be elated to get a refund check when 100% of it is your money. So to be able to have money that you have for an emergency, being able to see it accumulate, have it in your name, and be able to use it accordingly, I think is a big step with in addressing the financial illiteracy that exists oftentimes in many of our hardworking communities.
Representative Moore, I think you had a question. No, you didn't. Oh, I'm sorry. Chairman Dickey. I can't see that row from here. I lose a row. Sorry. Got you. Is that the one that it says you're on? I think, let me try it again. I'll try it now.
Okay.
Thank you, Mr. Chairman. Just getting back to this bill is a way to incentivize banks. Aren't there other ways that counties or municipalities could do that now with providing a free building or reduced rent or to subsidize in that kind of way? That's my kind of issue with this. Is it's new. I think the intent the author has is good, but I just have problems with the methodology of the incentive doing these deposits. So has your county looked at other type incentives to get banks to locate branches in underserved areas?
Pardon me. Yes, we have. And actually, one of the reasons that we have such interest in this bill is that we believe that this will be a big step in helping us accomplish that. Any idea that comes forward, in this case, the chairman is 100% behind it, but the chairman has one vote. And so nothing happens till we can count to three. We feel that this bill would be a big step forward in being able to assist. In this particular case, we hope to see a development underway real soon in the South Cobb, that this could be enacted. And along with that, we can supplement that possibly with a municipal site, county services building that would begin to build up that area. And hopefully that would lead by example. So at least it would be the first step. And I think that, we feel that at least other counties would look at this and perhaps want to take advantage of it as we hope to. And that's not to suggest that there's not a better way, but the point is that as we stand before you today, very little has happened. Very little has happened, in my view, since the bill was initially filed a number of years ago in terms of the market moving it. I certainly have spoken on it at every opportunity that I have. And this is why I appreciate this opportunity today, because this is the closest we've come to that point, to that threshold to get it over the goal line.
Thank you, Mr. Murphy.
Thank
Appreciate
you.
your time. Thank you. Lori Godfrey? No. Mr. Brown? Okay, so I think they have waived. Okay. Is there anyone else who would like to make a comment from the committee on Senate Bill 20? Well, Representative Mitchell had asked a question a little earlier about entertaining a motion. If there was a motion on action for the bill, if there's nobody else to speak, now would be the time for that action. Oh, hold on just a second. I think, did I get you right? No? I'm sorry.
Yeah, okay, good. I know the author's sitting in the back of the room, and I see the banking community. But as I understand this is voluntary. If the banks don't want to do it, nobody's forcing them to do it. And it's voluntary for the community also. And communities can participate or not. This just allows for this to happen if you have willing communities, willing banks, right?
It is voluntary,
okay?
I can tell you that. This is voluntary, that is true. Do you have something?
Yeah, Mr. Chairman, at this time I would like to move do pass.
We have a motion do pass, and we have a second. Is there any further discussion from the members of the committee on Senate Bill 20? No further discussion. All those in favor say aye. Aye. Any opposed, no. It's unanimous, the bill passes. Thank you, Senator. Okay, moving right along. Senator Kennedy, I see, is here. You can come up and explain your Senate Bill 157 and proceed when you're ready, sir.
This is another good bill, Mr. Chairman.
It's a great way to start. Thank you. Good afternoon, Mr. Chairman. Nice to be with you and the committee. I appreciate your flexibility on scheduling and rescheduling this. I know this was supposed to be heard last week, and I appreciate your accommodation. I bring to you in the committee Senate Bill 157, and this addresses what I'm going to ultimately talk about of a deposit placement program. So one of the questions you may ask is, why is this needed? What is the problem? What is sought to be addressed by this bill? You may have heard from some of your local governments back home, be it your city government, county government, perhaps your public library, of an actual difficulty in finding banks to accept public deposits. Why is that? Well, the reason is because there are different regulatory requirements on private funds than there are public funds that are placed on deposit with a bank. For private funds that we put into a bank account, there's no direct collateralization requirements other than the basic banking ratios that must be maintained by the bank. However, it's very different for public monies. That's because our laws say that that is so. So there are different ways that banks can deal with that. You may remember that 2 years ago in 2017, we passed the multi-state bank pledging pool, which offered an opportunity for banks to work collaboratively such that there was joint and several liability for the different banks in that pool, and it allowed for the acceptance of public funds in a way that didn't require the previous collateralization requirements, and in essence created a better environment for the placement of public funds with banks. Large banks have utilized that very successfully and to the benefit of our public institutions. But that has not been necessarily the case with smaller banks and community banks. So this seeks to create an opportunity for community banks to be able to do that. It's not necessarily divided that way, and the legislation is not intended to target. It's just a matter of functionally, the more small banks don't necessarily find it as attractive, and it's not something that they avail themselves of with the multi-state bank pledging pool. So, community banks would be able to accept local government funds under the proposal by allowing them to reinvest and loan these monies back into their own communities. Georgia is the only state that does not specifically recognize the use of a deposit placement service as an alternative to the collateralization of public deposits. One of the questions I had of the folks in looking into this was, in essence, well, what are those collateralization requirements across the board? And net, a bank that receives some of your money from back home from a county generally will wind up collateralizing that at 110%. That's not a great business proposition for a bank if they pick any amount of money and they have to, in essence, set more than that aside. That's not doesn't create a good business environment for banks to want to receive those funds. So this program would give municipalities another secure investment option in addition to using Georgia Fund 1 or the direct pledging method by banks that I've already talked about. It's important to note this is an option. It's not a requirement at all. And the bank's safety and soundness improves greatly from a liquidity standpoint for those that would choose to participate in the deposit placement program. This provides public entities another convenient, secure option, one account at a local bank with full FDIC insurance coverage, which we all know is at $250,000 level. And it also allows expanded availability for these deposits for many in rural Georgia. It also we anticipate that there will be increased lending to spur business growth back in rural areas. And I know many in this legislation, many on this committee have worked hard to help rural Georgia. The reciprocal deposits are deposits that a bank receives through a deposit placement network in return for placing a matching amount of deposit at other network banks. Across the United States, local governments, including city, county, school districts, police, and others, use reciprocal deposit services to access multi-million-dollar Federal Deposit Insurance Corporation, FDIC insurance, through a single entity banking relationship. Through the reciprocal deposit service, local governments can place funds into an interest-bearing account, a demand deposit account, and/or money market account that are eligible for FDIC insurance. The local government has or sets up a transaction account with a bank which is in the network of other banks using reciprocal deposits, signs the agreements, and then deposits public funds. The placement of the funds using reciprocal deposits occurs in increments below the $250,000 FDIC threshold, ensuring that both the principal and interest for all the deposits maintain that insurance and the attractiveness of that. By working directly with just one institution, local governments can access insurance coverage from many banks in the network, and the local government receives just one regular monthly statement and maintains that one bank relationship, preferably maybe with their local hometown bank. This is something that your local governments are going to like this because it gives them more access on where they can place their public funds. Your bankers are going to like it. The Georgia Department of Banking has checked off on this. The State Treasurer's Office has vetted this bill and has checked off on it as well. The GBA, Georgia Bankers Association, the CBA, Community Bankers Association, GMA, ACCG, NFIB, I should add maybe the GBI, FBI, and CIA, but I'm not sure about the last three. But all the other acronyms I've named are very happy with this and support this. And I think, Mr. Chairman, we've got some bankers in the back that if you have any questions, if I can't answer, I'll be happy to defer to them. But I would recommend this for your consideration and ask this committee vote it out.
Thank you.
Yes, sir.
Okay, are there any questions for Senator Kennedy on Senate Bill 157 from the committee? I think that's Representative Williamson, I believe, has a question.
Thanks, Senator Kennedy, for bringing this measure. I guess my question will be, is it not true that similar to the multi-bank pledging pool that you and legislation you and I both worked together on a couple of years ago that helps the much larger banks, this would be a liquidity vehicle, or provide liquidity to those banks that throughout rural Georgia in particular, but community banks all across the state, that would allow them to become public depositories at the least possible expense.
Thank you for that, Representative Williamson. Yes, sir, I had the privilege of carrying that, working with you on that other bill, and this does exactly as you stated. Yes, sir.
Any other questions? Senator, I believe you've answered all the questions for the committee, and I appreciate your presentation.
Yes, sir. Thank you, Mr. Chairman. I thank the members of the committee. This is hearing only today, is that right, or is this vote today?
Oh, we're going to see what pleasure the
Great.
committee is.
Well, then I'll beg you for your vote today. Then, if you can vote, yes, sir. Thank you. Would appreciate that very much. Thank you, sir.
Thank you, Lori Godfrey. Nope, we're going to wave back there again, or Joe Brannon, or we're going to wave. Okay, we're waving again. Okay. All right. So if there were a motion from the committee, now would be the proper time to hear it. Motion do pass, and we have a second. Any further discussion on Senate Bill 157? Okay, all those in favor signify by saying aye. Any opposed, same sign. That's a do pass. Thank you, committee. And unless there's no further business from the committee, I'll consider the meeting adjourned. Thank you.